Hey everyone, welcome back to Corporate Decoder, the place where we unpack the hidden stories in corporate filings. And today we might be talking about a company that seems to be playing a bit of a financial shell game with its own finances. We're diving into a recent filing from TuHura Biosciences Inc., a company you might recognize by its ticker symbol HURA. Now this isn't a quarterly or annual report, so we aren't getting a full picture of their long-term health, but rather a snapshot of a very specific and frankly concerning transaction. Think of it as an urgent alert from the company about something important that just happened. So TuHura Biosciences Inc. is telling us about something called a material definitive agreement. In plain English, that just means they signed a really important contract. And this contract involves money. A lot of it. This filing reveals that on the 27th of October 2025, TuHura Biosciences Inc. signed a secured promissory note and loan agreement with something called the Matthew Nachtrab Revocable Trust, dated the 18th of December 2014, acting as the lender. Now this trust is lending TuHura up to $3 million. This sounds like good news, right? A company getting funding, but there is a lot more to unpack here. This loan has a very short window. The company has already received $1.5 million out of that $3 million potential. This money is for working capital, meaning the day-to-day operations of the business. So they need cash to keep the lights on and do business. But here is where it gets really interesting. The loan is for a maximum of 30 days unless they can close an equity financing deal that brings in over $12 million. That deadline is the 31st of December 2025, or 30 days after that big equity deal closes. This is essentially a very short-term bridge loan, and the cost of this emergency cash is steep. TuHura will be paying a whopping 3% interest per month. Let that sink in. 3% a month. That annualizes to a very high interest rate. If this loan isn't paid back quickly, or if that big equity deal doesn't materialize quickly, they will be bleeding cash on interest payment. To add to this, the loan is secured by the company's US patents related to its Immunifex technology platform. This means if TuHura can't repay the loan, they could lose ownership of their valuable intellectual property. This is a serious commitment. But wait, there is more. Not only are they paying high interest and putting their patents on the line, they are also giving the lender warrants. These are essentially options to buy company stock at a certain price. In this case, for every loan they receive, they're giving warrants equal to 10% of the loan amount divided by the exercise price. They've already issued warrants for up to 65,217 shares with the initial $1.5 million loan. This dilutes the ownership of existing shareholders. More shares mean each existing share is worth a little less. This entire situation is classified as the creation of a new financial obligation for the company. Essentially, this is a new debt on their books that they absolutely need to address very soon. And the filing includes the actual documents. We have the secured promissory note and loan agreement as Exhibit 10.1 and the form of lender warrant as Exhibit 10.2. These are the nitty-gritty legal terms that spell out exactly what TuHura is committing to. Now let's put on our analytical hats. TuHura Biosciences Inc. seems to be in a tight spot. This $3 million loan secured by their patents with a 3% monthly interest rate and warrants for stock is a clear sign of financial distress. They are desperate for cash and willing to pay a high price for it, with potentially significant future consequences for their intellectual property and existing shareholders. The short-term nature of this loan and the dependency on securing a much larger equity financing round highlight the company's immediate liquidity concerns. If they cannot raise that $12 million soon, this bridge loan could become a very expensive problem, potentially leading to the loss of key assets. The strategy here seems to be a very high-risk, high-reward play. They are betting on their ability to secure significant funding in the very near future to escape this immediate debt and its costly terms. The success of this strategy hinges entirely on that upcoming equity financing. If it fails, the 3% monthly interest and the patent collateral could really hurt. In my opinion, TuHura Biosciences Inc. is facing serious financial headwinds. This filing is not a sign of strength, but rather a red flag indicating an urgent need for capital with limited options. The high cost of this loan and the collateral used suggest they either have no other immediate avenues for funding, or the urgency is paramount. Investors should be extremely cautious and closely monitor any further developments regarding their equity financing efforts. The company's future direction hinges on their ability to successfully navigate this immediate financial crisis. Alright, that is our breakdown of TuHura Biosciences Inc.'s latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.